Hey everyone, it's Kyle with the Case and Kyle team at Royal LePage, and today we are going to look at the market update for the month of May, comparing it from 2021 to 2022. So let's jump into the numbers. All right, starting in Hamilton, we saw the average sale price go from $800,000 up by 12.4% to $899,000. So we're starting to see the year-over-year increases start to shrink, but we're still seeing positive growth. Now, it has changed since the peak in February. We saw it come down about $120,000 on average in Hamilton. This is about an 11.8% decrease. So I'll go a little bit more in depth later on what that means after we look at both Burlington and Oakville. And we saw the months of inventory go from 0.7 up to 1.8. So this is the second month in a row where we've seen it come up over 1. All right, now let's look at Burlington. We saw the average sale price go from $997,000 up by 22.7% to $1,224,000. And we saw this come down from where we were at the peak in February by an average of $160,000, which is 11.6% decrease, but we are still up from where we were in the prices last year. We saw the months of inventory go from 0.6 up to 1.4. So like Hamilton, this is the second month in a row where we've seen it come up over 1. All right, finishing off in Oakville. We saw something different happen in Oakville with the average sale price. We saw it go from $1,537,000 down by 5.9% to $1,452,000. So this is the first time in a long time we've actually seen a year-over-year decrease. This is $480,000 on average, down from the peak in March. So why is this happening in Oakville compared to Burlington and Hamilton, which we've only seen about an 11% decrease in those markets? Why is it so much larger here? Now, what I think is happening is I think we're seeing a similar decrease in Oakville, but the numbers are showing something otherwise, because a lot of the homes that have been selling have been smaller homes that are at lower prices. And the larger homes have been taking a little longer to sell, therefore they are not impacting the average sale price as much as they have in the past. So we'll have to continue to monitor this over the next few months to see where the prices for the average sale price goes in Oakville. Now, we saw the months of inventory continue, much like in Burlington and in Hamilton, go from 0.9 months of inventory up to 1.8 months of inventory. So what do all of these numbers really mean? The reason we've seen the prices start to come down and the inventory starting to rise is because the main driving force behind all of this is the continuing increase of interest rates. We saw once again on June 1st that the Bank of Canada increased interest rates again by 0.5%. This is having an impact both on what people can actually afford, since we've seen several months of increases happening throughout the year, as well as people are speculating now, oh, maybe I should wait and hold off. Therefore, a lot of buyers are taking steps back from buying and waiting to see where the market is going. So for example, once we've had these high bidding wars for a long period of time, people become accustomed to the prices rising, so they want to jump in before it goes higher. And when the market is more balanced, people are accustomed to things sitting on the market for a little bit longer and jumping back in and being comfortable just to move forward. And when the prices are dropping, people are a little bit more cautious because people like to try to time the market. Now, our recommendation to a lot of our clients is it is impossible to know when you are at the bottom of the market. We can look at indicators to see where the market might go. We continue to see interest rates rising, and we expect that to continue over the next several months because of the large increases that the Bank of Canada has been doing in order to try to control inflation. Now, once the interest rates start to stabilize and not have as many increases, I think is when we're going to start to see the market rise again. Now, I don't believe we're going to see the same increases that we have over the last several years of 20 or 30%, but I think we're going to see something closer to 3 to 5% a year. And if this maintains with steady interest rates, I can see this happening in the market. So what does this mean for you as sellers? Well, we've seen the average sale price come down from the beginning of 2022, but if we still compare it to last year's prices, you are still significantly higher in most markets compared to where you were last year. Homes are still selling at a fairly quick rate. Often we see if it's priced right with a sale within a week or two. The homes that are still sitting on the market for a longer period of time are those people who are still trying to achieve the prices that they saw in February, but are not realistic to obtain anymore. And buyers, what does this mean for you? We have seen the prices come down, so now is a good time to buy because we're seeing less competition because a lot of people are sitting on the sidelines. And a lot of people are asking, should we wait? Yes, you can wait, and it's possible that the prices continue to fall a little further. But I don't think you're going to see a large crash in the market because the Bank of Canada wants to cool the market to calm down inflation, but doesn't want to cause a recession. We'll have to see where they continue to go with interest rates, but my recommendation is if you are looking to buy in the real estate market and you're planning to hold your property for 3 or more years, we can look back at the history of the average sale price in Canada, and we continue to see around a 3 to 5% increase year over year. And over the last number of years, we've seen home prices double in about 5 to 6 years. So will this continue? It's not a guarantee, but if you plan to be in the market long term, it's better to get in now than trying to time the bottom of the market, which is very hard to do. And the last thing for buyers, the benefit of buying now is you have so many more options than you did compared to 2-3 months ago. Since the months of inventory has continued to rise, you have more options to choose from and are less likely to be in a bidding war or competition situation. So you have more time and an opportunity to bring in an offer, not having to worry about competing with 5 or 6 other offers. And that's your market update for the month of May. If you have any questions, comment down below and let me know, and I'd be happy to answer any of those, or feel free to reach out to us on Facebook at Case and Kyle or on Instagram at Case and Kyle Team, and we will talk to you next time.